this business, you need to want to serve others. That's what hospitality is. Operating a hotel is serving others. All I've ever done since I got out of college was operate hotels. And I found out pretty soon that I really enjoyed the business. I think anytime you're coming up through the ranks and you're learning a business, you learn what you should do, and what I really learned is a lot of stuff that I didn't want to do when I had my company. The inspiration I had for starting Vesta was a vision of what I wanted the company to be, and I had values of how I wanted our hotels to be operated, including how we take care of people. It worked out pretty well for us. We started over 20 years ago. But there were also some difficult times during those 20 years. We went through 2 really tough downturns. We were able to operate our way through that. I like to say we're seasoned. We're not old, we're seasoned. You know, I think one of the first things people need to know when they're investing in the hospitality and the hotel business is it is an operating real estate opportunity. You can't underplay the importance of how a hotel is operated and the team that is involved in making sure that it's operated well. I think the Vesta executive team is probably some of the best and brightest in our industry. I know there's some big companies out there, but we have attracted and retained individuals that have tons of experience in this industry. Our ability to underwrite hospitality real estate risk and mitigate that risk is one of the main reasons for our success. I sleep at night because I know that we have realistic pro formas. I know we're not over leveraging the asset. Rob Gartner, who underwrites our assets for us, does an exceptional job. I mean, most of us can go out and we can put together our little pro formas and look at our all-in values and our exit values and what our interest rate's going to be and do the forecast. But to hit that, you really have to be able to operate a hotel. The operations part is really the easy part for us. In reality, it's very difficult for somebody who's never done it before. One of the values that we have in our company is that you have to have a clean hotel, well maintained, with great guest service. If you don't have those 3 things in place and you're not taking care of your guests and your associates, you're not going to maximize the value of your hospitality investment. One of the things that I believe in very much for Vesta Hospitality is that everybody associated with Vesta will win, will be successful, and will benefit from our relationship and their association with our company. That is from our investors to our bankers to our dishwashers in our kitchen. Everybody in which we have a relationship needs to substantially benefit. Good afternoon. Rick Takach, CEO, Vesta Hospitality. Vesta Hospitality is a nationally recognized hotel development, management, and acquisition company, and we're based in Vancouver, Washington. Last September, we celebrated our 20th year in business. So that's a big milestone for us. So I hope that you'll take 3 things away from my presentation today. Number 1, if you're looking for strong, risk-adjusted returns that'll help diversify your portfolio, Vesta can help. Number 2, the hospitality industry is doing really, really well right now, but there are great opportunities in every market cycle. And number 3, my team and I love the hotel business. We have dedicated our careers to this industry, and it has been very, very good to us. So one of the things that I think you'll find attractive about our fund is that we grew up in this industry. We have worked, all of our team has worked in every position in every hotel. I mean, I've washed dishes, I have made beds, I've worked the front desk. But what's interesting is now that we're developing and we're acquiring hotels, we put our own money into the assets. We have skin in the game. So on a daily basis, we're managing our investments together. So this is one of my favorite graphs. Basically what it says is that over the past 30 years, there are 35% more travelers staying in our hotels, and on average, they are staying 35% longer. We think this puts the hotel industry on the right side of the risk equation, and that is why you have to have some hotels in your portfolio. This industry is not going anywhere. And if you look at the graph and you notice that Vesta was in business for the last 20 years, you'll see that we've been through 2 major downturns. They were very difficult times. We learned a lot, but we put in some proactive strategies. We came through that downturn well, and we found some great buying opportunities during that downturn. Whenever we can, we like to affiliate with Hilton or Marriott brands. Hilton has 13 different brands. Marriott has over 30 brands since they had a merger with Starwood. They're not all represented here, but what we have found, when we affiliate with these brands, we have higher operating cash flows and higher exit values. They do a great job. And what we have also found when you do Marriott and Hilton brands is they help mitigate our risk from new competitors. I'm sure you've all heard of Airbnb. I can honestly tell you, with the brands that we affiliate with, I have seen no impact on our hotels due to any kind of new competition like that. We also have strong relationships with Hyatt, Intercontinental Hotels, and in fact, we have great relationships with all the major brands in the industry today. So, in the hotel business, you have market segments. There are budget hotels to luxury hotels. We have a tendency to want to buy in the upper mid-scale to upper upscale levels. So on the top left here is a Renaissance hotel that is a Marriott product that is considered upper upscale. On the top right is a Hilton Garden Inn, Hilton product, upscale. Bottom left, Homewood Suites, which is considered upscale extended stay. And on the bottom right is an independent hotel. We do independent hotels on occasion. They add some additional complexity, but if done right, they're a good investment. So diversification can mean different things to different people, right? So not only can we help diversify your real estate and investment risk, you have the diversity with hotels of all these different market segments that I just told you about, budget to luxury. You have different hotel brands, and you have different geographic locations throughout the country. That offers all kinds of diversification just inside the hotel industry. And this map shows the many projects that Vesta has done over the years, current and present. So we've been in business for over 20 years for a reason. And I came up with 5 reasons why, but number 1, I think, is our executive team. I am really, really proud to be associated with this group. They are really good at what they do. And I started adding up all the years of experience we've had together. This group has over 250 years of hospitality experience. That's a lot of experience. And 100 years of experience inside Vesta itself. As I said, this group has dedicated their career to this industry. I think the video told you that I've been in the hospitality business for over 35 years. It's the only thing I've ever worked on and focused on since I graduated from college. I focus 100% of my attention on Vesta Hospitality. I do, however, have some industry obligations. I had the privilege of chairing the Intercontinental Hotels Owners Association, which was a worldwide assignment. I represented thousands of owners around the world. It was an incredible leadership opportunity. I also had the opportunity to serve on Hilton Owners Advisory Board, and I currently am on the board of directors of the American Hotel and Lodging Association, which is the premier advocacy group for the hospitality industry, and I co-chair the Management Company Council for the United States, so I stay a little busy. Number 2, our team has great expertise in hotel management, hotel construction, doing hotel capital improvements, funding and debt restructuring, brand repositioning, and asset marketing. Number 3, if you hire the right people, you give them the tools and you treat them properly, you have lower turnover. That gives higher revenues, higher profits, and better investment returns. This picture is of our executive team and some of our investors and industry professionals from last year at our leadership conference that we have every year. Wish I had a picture from last week. We had this year's leadership conference last week in Cabo, Mexico. It was quite a good time. So we talked earlier today, you heard Marcel talk about underwriting. We have very stringent underwriting practices. We have a 54-point checklist that we use for each potential new hotel transaction. Look, bad deals can consume a lot of time and energy. That can take away from maximizing the value on our good hotels. So we take painstaking amounts of time of time to underwrite up front to mitigate our long-term risk. Part of our risk mitigation strategy is to have realistic pro formas that take into account market downturns. We are careful not to over-leverage our assets. It's very important that you can sleep at night, as I said in the video. One of the other things that we've done is over the years is we have taken a lot of time to develop relationships with individuals that can help us find off-market transactions. It takes a lot of effort, a lot of time. And we actively mine that network of individuals to find off-market deals or deals that might go upside down, and we find out about that way in advance, and it gives us quite an advantage of what we want to buy. Number 5, relationships. We think a long-term perspective is very, very important in our business. We want everybody associated with Vesta, no matter who you are, to be happy, to mutually benefit, to be in a win-win scenario. I would say that strong relationships equate to credibility in this business, and we've worked very hard to get there. So creating asset value. Part of our underwriting process is to find weaknesses in a hotel. Can we manage it better? Does it need to be better capitalized? Does it need to be rebranded or repositioned? We go through all of that, and we look for those weaknesses, and once we find them, we say, how can we do it better? And that's how we underwrite our projects. This is a hotel that we bought last year. And one thing I will say about all these projects, no matter what we find as a weakness, every one of them need to be improved. Every one of them need to have capital put in them to make the product better. So this one we had last year, it was in Central Oregon. I don't know how well you can see the pictures, but the project came out fantastic. We spent $10.5 million renovating the property. It is running at a very high level, and we're very happy with its outcome. But it doesn't stop there. Part of our philosophy is not just to renovate these things once. You have to continually put in capital to keep them fresh so that you can keep your cash flow. That creates better exit values. So let me give you a couple specifics about the fund. We launched it in January. We put 2 hotels in the fund at the end of January. So we've had the hotels about 2.5 months. At the end of March was the end of the first quarter. We made our first distribution. It was a strong distribution for the first 2.5 months. Our plan is to continue to add hotels to the fund to add more diversification to the portfolio. So the focus of the fund is to invest in well-chosen hotel properties with strong value-add potential and to leverage the experience and dedication of the Vesta Hospitality team. Vesta may use the funds for purchasing an asset outright, hotel asset, co-investing with institutional capital, which we've done in the past, building a new hotel. We generally acquire, it's a little safer, but sometimes we build new, and then providing a bridge loan or preferred equity. Generally that happens during a downturn. So a few more highlights. Its targeted annualized net investor returns are a minimum of 15% plus. It's an evergreen fund with built-in liquidity after 3 years. Minimum investment is $50,000. There are quarterly reports and distributions, and Fairway is our third-party administrator that does all of our reporting monthly and quarterly and annually. You do get a K1 from this, so you get to take, and I think our last presenter mentioned this is important, you get a K1, you get the depreciation, you get to take the tax advantages from this investment, and that really makes a big difference. That's not in this noted return. So here's the first 2 hotels we put in the fund. One of them is the Homewood Suites in La Quinta, California, just right over here in the desert. The other one is the Embassy Suites in Brunswick, Georgia, both Hilton products. The total capitalization was $41.4 million. We put on 60% debt, or $24.8 million. That left an equity requirement of $16.7 million. How that equity broke down was this. Myself and my team put in $1.8 million. The Vesta Fund that we're talking about here put in $2.4 million, and a high net worth couple put in $12.5 million. They're here today. I love those guys. They're great. So we have a one live deal on here now. We have always deals in the hopper, but I wanted to show you this one. I'm not sure if all of you are familiar with Vancouver waterfront, but it is being redeveloped right now. We have an A++ location. It's going to be a new build. The reason I'm building it is because I can see the site from my office. It's in my backyard. I know it well. But we're going to develop a Marriott AC hotel, which is Marriott's new lifestyle brand, about a $40 million capitalization amount, and we're going to raise $15 million of equity. So I just wanted to tell you that every picture you saw here today was of a Vesta property. Those were not stock photos. We're proud of our properties, and I just thought I'd mention that to you. So in summary, our fund provides you with excellent risk-adjusted returns and excellent diversification opportunities. The hospitality industry is here to stay. There are always opportunities in all market cycles. And our team is dedicated to this industry and is actively managing your investment on a daily basis. So before I go, there are three of us here today, and I just want to introduce the guy who does most of our underwriting, and that's Rob Gartner, who's our VP of Acquisitions, and Elson Strahan, who is our VP of Investor Relations, and he's the one who handles anything that any of our investors would need. We're very proud that Fund VII actually invested in our fund. So Fairway did their due diligence on us, invested. That was big. So that's it. Thank you for your time and attention. I hope you'll consider the hospitality industry.